Hey, welcome into the channel. Today is Music City Trader, and I'm talking today about a 20-second strategy for pocket option. Stick with me. I'm going to show you this new strategy. Actually, and I hate to tell you, Todd came up with this strategy, and he called me up and he's like, hey, man, this is working. And so I've been testing it, and it'll be coming out in my new book as well. But I'm actually going to show you guys today the new strategy right here on the podcast. So along with these are all these charts that I'm working on here. Basically what you're doing is you're going in a 1 minute candle. I'm going to jump right into it because I'm just not going to waste any time here. You're going to set up your indicators exactly the way I set up my indicators. And I'm just finishing my new book, and it actually, for some reason, I can't figure out how to get this this thing up here. So hold on one second. Let me get this up here. Binary options battle plan. Yep, there you go. Okay, we're going to open this up and try to close out this. There we go. Perfect. Okay, these are the charts for the new book that are coming out. And I'm going to scroll all the way down here, and I'm going to show you the indicators. I have this all set up. We're using the MACD at a 12.26.9, so you can stop your thing and set up your MACD. We're using stochastic oscillator with 14.33 period. Now, basically, these are my stock indicators. This is basically indicators I use all the time. And if you go to fascinatingworldofbinaryoptions.com, then you can find out my indicators there. And then RSI, I'm using the RSI a little bit in this method, but it's really the MACD and stochastic, and then the moving averages. Okay, so this is actually the moving averages are set up at 6, 12, and 35. So all of this makes sense. You can stop, you can pause the screen and set up your indicators if you want to once you get it done. But here's the screen that you would set up your indicators: stochastic, your MACD, and your moving averages. We're in 1 minute candles. And what we're going to be doing is taking 20-second trades, okay? And here's basically the whole method sort of drawn out. And this is part of the new book that I'm writing that's coming out very soon. Hopefully in the next month or so, the new book is coming out. So I'm gonna go ahead and show you in this setup here that we're looking for the green lines. So setting up my indicators exactly the way I set them up is important, because when the green line is above the stochastic, when the green line is above in the MACD, you know, and I'll show you this in real life in a minute, and when the green line is spread out and moving up in the moving averages, all of these three things happen. And then basically what you're going to be doing is taking 20-second calls or puts, depending on if it's the red line. You got to be really careful with this, but you can win a lot of trades and in a short amount of time. And it's a push method with like a 5 or 6 deep martingale. So basically what you're looking for is basically the wide openness of the moving averages and everything moving in a direction. You're looking for some serious trend. You're looking for some serious trend direction, but not like long-term trend direction, because you're taking 20-second trades. Here in this example, which I haven't marked up for the book yet, it's like a perfect scenario. I'm going to show you where your entry points would be right here. So you have the green line above here. You have the green line above here. You have the green line above here. So your MACD is heading up, your stochastic is heading up, and your moving averages are heading up. So what I would be doing in this scenario right here in 20 seconds, in 20-second trades, I'd be entering in 20-second trades whenever I see it dip down. It would dip down, I'd enter a call here. It would win or lose. If it wins, I would enter another one. If it wins, I'd enter another one. If it loses, I would enter another one. Sometimes some of these could have lost because there are wicks on these candles. So you can see that, you know, maybe I entered down, maybe I entered here and it wicked up down here and I lost that trade. That's okay. When it's down there on that wick, all you would do is re-enter. So this is sort of a fast moving martingale. I use my chart to pick so I say my first trade is $1. I'm just making this up here. And my second trade is $2.25. And then my second trade, I think, is around $5.50. You know, so if you're doing this, I'm using a 5 deep martingale. 5 or 6 deep is what I've been doing, and it's been working really well. What you're going to do is wait till these lines up, okay? Then you're going to take a 20-second call. Now, if it dips down on this thing and you lose this, all you're going to do is, while it's down here, you can take another 20-second call. And you can see that with this pressure going up, you're going to win a lot of those. You're not going to go 5 deep. You know, the only danger is right here. You have a big red candle, but you also have these indicators are starting to get closer together, okay? You start noticing some cricking and you think like, ooh, this could be turning around. Maybe you see that this is a line of support or resistance back here or back there, wherever it is. I can't see it in this chart, but maybe there's a little line. Right here, the red line goes above the green line, and that would be a stop point. That would be just a very small indicator. This also is pointing down. Your RSI is going that way for a minute. It cricked and it's heading down. That would be a point where if you lost a couple right here, then you would stop. But with my method, you might actually win those too, because it might dip down. You take a call, it comes back up, then it dips back down. It just ended down. It doesn't mean that it wasn't bouncing up and down. And it doesn't mean that even if you lost 3 on this candle, your 4th one that you click on down here is going to win because it's still going up. But I always would just be very careful and stop when you get to a point in the chart where you see the red line is converging in stochastic or it's cricking down. Any of these lines start to converge or start to crick down is where you're going to be careful, because you're looking for this to happen. You're looking for this to happen and keep going. You're looking for tight pressure up. Again, right here, you have a scenario where the green line went above. Okay, we'll zoom in on this. The green line went above here. The green line's above here. And the green line is still above here. So in this little area where it crossed over here and starts going back that way, back up, you probably would have won these trades. Okay, your 20-second trades. You wait for the dip, you take your call. Now, the one nuance of this that I'm going to tell you, and the reason I call this a push method, is when all of these indicators are lined up and it's all good, what you're going to do is you're going to enter a call. Now, let's say that this call right here lost. Let's say that it dipped down to this little wick level. Maybe you put your call right here. Okay, let me change colors so you can see that. Let me change colors. Maybe you put a call right here. Okay, and it dipped down and you lost. You're going to immediately, as soon as that 20 seconds is up, you're going to take another call because you can see that it went back up, okay? So you're looking for dips, and that's why I'm calling this a push method, because once you enter and all of your indicators are right, you don't just enter one time and lose. What you do is you enter right here. If it dips down and say you lost this just by a hair, take your next call right here, and then the next candle, next 20 seconds, it goes up, you get a little bit of up pressure, and you win. Now, what you'll do there is you'll start to look and see, oh, am I still spread apart? Am I still going to keep going? Because maybe you are going to keep going at that point. Maybe you are going to say, yeah, I'm going to keep going. But when you see this happening right here, when you see the indicators start cricking, you would have seen it here. You would have seen the red already crossed over here. This would be a big notion for you to stop, like hey, the chart is changing. The red is now above, and this green is still above. But look, it's getting narrower. So it went from being wide open, and it's getting narrower, and then it crosses. So as soon as it crosses, you already would have lost quite a few trades right in here. Possibly. You could have possibly won or lost. This is a question mark area, but not a safe area, because you've already got indicators moving down. You have a cross down here in stochastic. You've got these in the MACD. You've got the MACD narrowing down, almost touching. You've got a little crick going down in the RSI. It's heading down. So this is a point that you would think the pressure is off. The pressure is changing, and you've got this sort of bouncing sort of area here. This would be a questionable area. Actually, it would be an area where you would be stopping. So you're going to look around the charts, find those chart scenarios where there's really nice open moving upward motion, wide open indicators, and they're actually better if they're getting bigger and wide. You got red, you've got green above here, you've got this going above here, and you've got green above here. This is the area right here where you would want to be entering these trades. And you're going to find those areas all kinds of places in the charts all day and all night. Let's go ahead and look at pocket option itself, and let's see what happens in pocket option. Where if I can even get a browser open here. Okay, pocket option. And today I increased my account by 10% from like 175 to 195 doing just this method. And you can see like right here in pocket option, Also, I like to stay away from the white line. So once it's crossed through the white line, it's underneath the white line. You've got the red above here. You've got the red above here. You got everything going down, and you've got a lot of down pressure right here. So if you see some wicks and some little candles, which makes me think not as super strong, but definitely a down motion. So you'd wait for the rise and you'd push. You wait for the rise, you'd push. Wait for the rise, you'd push. Let's find another area where I would think that it would be good. I really like it to be away from the white line, really away from the white line. This looks like that might be the same area I was talking about in my example. Here's another area that you probably would have won quite a few and been pretty safe. You have the stochastic acting kind of funny. It's reds above, greens above, reds above. So you got to be careful because there's up and down pressure in stochastic. But you have right here in this area, you have the green pressure above. Right here, definitely, once you get away from the white line, it starts to open up. You've got green above, and you've got the RSI breaking above the 67 or the 70 line is what is technically the 70 line. So you could probably win a bunch of trades right here. This candle right here was farting around, moving kind of slow, which is a little dangerous, but then continuing to press up. This one right here would have been iffy. When you get to here where you see the stochastic starting to converge, again, that's where you'd want to stop and say, okay, I've had enough for that for now. So, hey, if you want to follow along with our signals group, we go live every evening around 10 or 11 CST, that's Central Standard Time. About 10:30 Central Standard Time is when we're doing our fascinating signals. Go to fascinatingworldbinaryoptions.com or check the link in the description because we're doing a 3-win-a-night signals group where we get on, we win 3 trades at full 92% payout and with about a 5 or 6 deep martingale. You can follow your own financial strategy in our signals group, or you can do exactly our strategy. And then just keep an eye out for my new book that's coming out in the next couple months. And it's going to be one epic day. Thanks for watching. I will see you on the next episode.